Okay, so the next one I want to cover, this is for the newer folks. I got questions about what does it mean to get flat? And I want to cover that, and I also want to show you on the platform. I'm going to go into demo mode, and we're going to take a couple of trades to show how we get flat. Okay, so here we're in the demo platform on Nadex. It's exactly the same as the live, but this way we can just kind of do some trades, and you can take a look at how we can get flat. I'm going to do 5-minute binaries to kind of speed up the process. What 5-minute binaries are just 5-minute contracts. So it's, you think today was volatile, try doing them on 5 minutes. I mean, 5 minutes alone are just, it's like turbo trading. It's crazy. So let's say we're shorting 2187. Well, we could even probably bring up a chart here and kind of see in context what we're dealing with. Okay, so the chart is up. We're on a 1-minute chart, which is about what you would do. So let's just say we think this might be turning into a pennant. So I want to buy 21879 ish. So well, now we're in dark. Okay, there's a 30-second dark on 5 minutes. So we'll wait for the next set to populate, and it has populated. Okay, in 2, 1. Okay, so let's say, okay, we're getting back up to resistance here. So now I want to short 2189. Okay, let's short that. I'm gonna click on the bid and let's sell. Let's just sell 2. It's dropping. Let's do 35. Okay, boom, moved up. Let's take a look at where we filled. We filled at an average price of 37.50. Awesome. So what I don't want to see happen is price move against me, right? So if price is starting to move against me, and let's just say you're in a trade with me, and I say, hey guys, on this trade, if you see the stop on this trade is $70. That's what it was today on the pound dollar that we were in for the 7 p.m. What that means is if this price starts to go back up, we've taken a short position here on the 2189. Okay, so if this moves against us to the 21, right now we're at 21884. So now it's starting to move against us, and I say, hey, let's take let's be defensive. Let's take a stop at 55. Okay, 55 just hit. Okay, I want to get out of the trade now. What you would normally do is you'd have a ticket staged for 55, or you might go higher. I'd go like maybe $5 higher just in case. So when you see that get hit, then you can hit it, and then price doesn't run away from you. So what you want to do is, if I say get flat, you're going to click on your open position. Okay. By clicking on your open position, it already populates the side that you would get flat on. This is going to empty out your 2 trades, your 2 lots, and it's going to buy out the position. You sold the position, now you want to buy it out to get flat, right? Let's just say we don't want to see this hit 40. If we see it hit 40, we're out. You could even stage the ticket for higher. You could stage it for 60. Okay, 40's there. We hit it, and we're out. You see how the contract disappeared? That's how you get flat. You can do it again. Sell. We'll sell it again. Okay. Sell it here at 34. Place the order. Okay. Order's working. So let's speed it up. I tell you get flat now. Okay. It's at 50. Let's just make it at 60. Get the heck out of there. Place the order. Boom. We're flat. Same for the buy side. We're going to buy at 54. Place the order. Okay. Now we're in it. Working order plus 10. If I click on that working order on a buy, the sell side's populated. I want to get out. Set it for 20. It'll give you the best fill. See that? Boom. We're flat. One more time on the sell side. We're buying this one here at 46. Okay, we're in the trade. I tell you to get flat, click on the working order, make sure you're lower than that number or higher than that number, depending if it's a buy or sell. So if it's going to fill at the best price, and you're out. Okay. If you set it to stop out, let's say you clicked on 27.75 to stop out of that, and you place the order. If the price moves away from you, then you're not going to stop out. Okay. That's why I say lower on a. If you're trying to sell to get out, then make sure price is lower than the bid. You can set it at 15, but it's going to fill at the whatever the bid's at. Okay, that's like a market order. Or alternatively, you make it just a market order, and you can get out that way. Same on the buy side. If you don't want to mess with that, you don't want to mess with worrying about bid or offer, then you could just change that to market order and place the order and get flat. So I hope that's clear to you guys on getting flat on open positions. That's the only way to get flat, to stop. Getting flat means closing out the position. You cannot set a limit order to do that. You can only set limit orders for price targets. So we will have situations where I'll say, we're entering, set your price target for, if we say we bought at 55, okay, we want to exit the trade when we see price hit $90. Then you set a sell order. You click on that open position and you would set a sell order for higher. That would be setting a target. But for getting out of a position, a stop position, you can't have a working order for that, because it's going to be, your stop's going to be lower than where they're bidding at, or they're offering at, or higher than where they're offering at, and so it instantly get taken out. And that's not what you want. You want to have a backstop behind, either below the bid or above the offer. And as the move goes against you, then you would stop out when the offer met your stop price. But they don't have that mechanism built into Nadex yet, so it's a manual process. You have to literally, if I say get out at 70, just to be safe, you're going to set it at 75 or 80, and then when you see price get near 70, you're just going to hit it. Boom. So I hope that clears it up. I would recommend actually practicing on the demo account, getting in and out of trades. So for setting a target, for example, if we clicked on this 21.87, I'm not even looking at what price is doing. Let's just say we bought 10, right? Boom. Okay, so we're in for 10. Oh no, we're working. Okay, that filled. Now let's just say I want to make $10 profit on each one. So my average price is $54.50. So my target then would be, let's just say 65 on the price, and we place the order. So now we're working a limit order, but we're working it for a profit of $10 per trade, or $100, right? Because the bid's always going to be less than the ask. That's what you call the spread. You're always going to enter a trade instantly negative. That's just the way it works. The spreads aren't tight. Spreads are tighter here, but you can see here on this mid strike, they're pretty spread out, like almost by 50. That's actually not a good spread. That's bad. But if this price were to move up, let's say 21.87 started moving up, then okay, now you saw it, profit just jumped, right? 45. But this is why 5-minute binaries are so volatile, because you're compressing the premium curve expiration. So you see our working order, it's there. This is the professional market maker at 62.75. They trade in these bigger lots, 20, 25. That's a professional market maker. This is our order. If price continues to rise, 21.87, our strike is 21.87. If it continues to rise, then we will move to the front of the top of the ladder, and our order will be at the offer. So there it is, and it filled. Okay, did you see that? It just filled, took out the order. We made $100. Positions are closed, and we get a little badge that we're a Nadex All-Star. But I hope that was clear. Again, practice in the demo. Watch this part of the video over again a couple of times if you need to. But if you guys don't get this right, you guys are going to set up, you're going to set up a trade. You're going to actually, you're going to be like, oh, he told me to get out at 70. You're going to set a sell order, because I've seen it. You're going to set a sell order for 70. That's not what you want to do. You don't want to, you don't want to have it, because what it's going to do is going to add to the sell position. You don't want to do that. You want to click on the working order and get flat that working order. So that's about as much as I can explain that. If you have questions, put them down below. If you have comments, put them down below. If you like the video, give us some likes. And if you aren't a subscriber yet, please subscribe to the channel. All in all, guys, for the volatility, good job today. I know you guys made some money. We did have that one loser. It was an outlier move. I'm glad you guys got to see the outlier move, because that's what happens even with high probability setups. That was 100% short term, 98% long term. You don't see those bust every day. But I was glad you guys did see it, and I'm glad it was a day where we had enough volatility that we could have other trades to make up for the loss and end out net positive. Okay, until next time, stay safe out there. It's volatile. I would watch trade size until we figure out and get a handle what's going on. We'll talk about it in the room. I'm going to watch it overnight and see what's up. And I may tweet out some things, if notes, if things are looking a little, if I see something that's worth noting, I will tweet it out. But we can talk in the room tomorrow. I will not tweet any trades out until things seem to have settled. If it's super volatile like today, I want to see this kind of settle down. We fired out 5 trades today, which is, you know how it goes. Some days we don't fire off any trades, or maybe it's 1 or 2. We fired off 5 today, so if we don't get any tomorrow, that's okay. Alright guys, thanks for watching the video. It was a little long, but today was not normal. If you have any questions, like I said, ask below or hit us up in the room. Thanks again for watching. Take care, guys. Trade safe. Bye-bye.